ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the coattails of the...
Good afternoon. Can everyone hear me okay?
Yes.
Thank you, sir. I appreciate that. Hey, Derek. Welcome, everyone. If everyone wouldn't mind to put your phone or whatever device you're on mute, I can also do the same too here. Thanks for showing up. Yeah, we're going to talk about two things today. I'm going to talk about the post-election results, some of the Trump trades that are being discussed, and then I'm going to go right into EOSE. I was able to go through the numbers, also listen to the conference call, and let's see here. Let me switch my screen, please. Okay. If you can't see my screen, I'm just going to show SPY on the daily. And then I'm going to show, okay, SPY, new high. Hughes, new high. I said it in the newsletter for the last 4 weeks. I will go long, okay, if and when the SPY gets above 600. Okay, so what do I make of this? I was just having a one-on-one with one of the VIPs, and I was letting them know. I woke up this morning sort of chuckling because I've been here before. It's amazing to me how short the market's memory is, and yet it was 4 days ago that the market was down almost 1%, and things were looking very bad. And I mean, there were all these risks, and yet here we are today. And let's put in the context: Trump won. Looks like he has a mandate, but some of his power is limited. And whenever these types of binary events and these types of market celebration events happen, that could last for a couple days. But the one thing that I would ask you is, do you believe from now until January 20th, when he is sworn in, that everything will go smoothly? If you do, then that's a valid opinion for sure. It's not what I believe. I believe there is a tremendous amount of potential for shenanigans, and we still haven't heard. I think she's speaking now, but we still haven't heard from the Democratic Party yet. So I do not, if we get, and I put this in the newsletter, there were 2 scenarios. If we get this and it turns into a blow off top, okay, then we will get long. But leading up to this, and this is so important, I didn't wake up today and look at the market and say, oh, the money I could have made, or, oh, my VIX calls, because the thesis for those has not changed. Now, I will admit on the VIX calls, I'm a little surprised nothing happened into the election. But the going on a go forward basis, I don't see how. And I'd love for somebody to make the case. My whole trading philosophy is about protecting capital. I think people think that, I don't know if they think it's just a tagline or something, but I'm absolutely passionate about it. So I don't look at this market today and do a straight line extrapolation and say, well, I guess the market's fixed and everything's going to go up. Not at all. In fact, if anything, and I also said this, I am more than happy to short this thing higher. Let's look at what's still out there. We have rising interest rates. We know why that's happening. Okay. One of it is you've got the buyers of the debt are demanding higher interest payments. Part of it has to do
Okay,
with,
go outside, Trix.
hold on, we got somebody who's got their speaker on. We still have the CRE mess. We still have the big banks. We still have consumer credit. We still have rising unemployment. I mean, he's not going to fix those overnight, and he's certainly not going to fix them all at the same time with the wave of the wand. Now, the one thing that should happen is a decrease in overall geopolitical risk, and that could be reflected in oil prices. However, he's talking about drilling. I mean, opening up. He said it. I don't know if it's true. America has more oil than Russia, and whatever. He's going to drill, and that could put pressure on oil to the downside. Okay. So that happens. It's disinflationary. But at the same time, you still have interest rates that are rising. They're rising because, again, all that liquidities got pumped into the market, and you have a shit ton of debt sitting out there. And right now, the Treasury has decided that what they're going to do is they're going to let the long end of the curve rise, and they're refining with the short end of the curve. So what they're betting on is that rates go down. First of all, I don't think it's going to be this straight downhill path to the inauguration. That's number one. Okay. Number two, I absolutely don't think that, for lack of a better term, he's going to be able to avoid the landmines that are sitting in our economy right now. The big landmine, whether it happens before the inauguration, after the inauguration, it is inevitable. There can only be one of two solutions to the bank's issues, to commercial real estate issues. There's either new liquidity, which wraps in all that bad debt, or they got to pay the piper. There is no in between. There can't be an in between. I don't think he's going to be especially friendly to big banks. I think he's going to go after Citadel. They should have probably not, however their name got on the radar for shorting, DJT. If taking all that into account, that is not going to fix everything. However, I do think that companies that largely manufacture in the U.S., I think they're going to do better. Why? Because they're going to have less operational risk, because they're not going to have to deal with the fear of tariffs and then the consequence of tariffs. And he's going to do tariffs. I mean, this is, I think if people are expecting a calmer, nicer Trump, this is not going to be him. I don't think I think this is going to be Trump unleashed, where he's only got 4 years. I don't know, but I think he's going to try to do as much as he can. I know that people are talking about the prison trade. Again, these are all great ideas, but I don't know how many of illegal immigrants are going to leave the country now. A lot of them may whatever they call it, exit, a lot of them said they were going to do it. They may do it. Okay. Um, I don't know if prison companies are going to do well. I won't know that until nobody knows that today, because he named one cabinet person today. And I don't think it was an official announcement. It was the guy who got asked, released a letter. And it's Tom, what's his name? Anyway, he's Secretary of Agriculture. He's going to be great, by the way. Keep thinking Mattis, but that's one of our members. But anyway, we don't even know who's his cabinet's going to be. He has not. He's only said campaign platform. We do not know what his platforms are going to be because, and I was talking to Shaner about this earlier. If he's he's going to let Elon Musk in there, think about this. If he's going to let Elon Musk in there, okay, let's do a baseline. If the baseline is the market's up today because the market's excited that Trump is going to fix a lot of stuff. Okay. There's the baseline. If that's true, one of the ways he's going to fix a lot of stuff is he's going to significantly reduce the size of the government. The federal government is the single largest employer in America. Now, are you telling me that they're going to lay off hundreds of thousands of federal employees, largely Democrat, and there's not going to be any pushback? There's going to be no cries that he's doesn't care about the small guy. I mean, come on. People are partying today like, it's freaking, 1980 was 1984 when Reagan got elected. So it's just, to me, I'm looking at this going, okay, we will have a snapback to reality. Now, what trades would, again, I want to be short emerging markets. I haven't figured out which one I want to get short, but here's why I want to be short emerging markets. The dollar should continue to get stronger under Trump. He's what I would call a severe protectionist. Okay. Trump is not a fiscal conservative. He didn't reduce the size of the deficit. Okay. So it is, oh, and be careful. Remember this. When they talk about cutting the budget, make sure we're talking about actual cuts, not cuts to projected growth, because they do that number two. So emerging markets, China, shorting China, I think might be a good play, but it depends on their stimulus. Definitely emerging markets, commodities and hard assets, because if the choice is deflation or recession or inflation because causing recession, either way commodity prices go up because they're hard assets. So I'm looking at commodity prices. I think Trump is friendly to nuclear power. Perhaps that I've looked at a couple of the smaller nuclear companies and defense. Trump, he's going to pull back troops, but he's going to spend more money on modernizing the military. So I think defense does very well. That's it. Until we hear something from him about his platform, about really which one of the things that he said a ton of things that he was going to do. Now, which one of them is he going to choose? That's going to give us a hell of a lot of credence. I'll tell you one. I'm waiting, but I'm going to short pharmaceuticals, the bigger ones, because Robert F. Kennedy put out a thing today and said, effectively, he's going to shut down agencies. And one of the tweets he put out was, if you work there, pack your bags and keep a record of your files effectively. So being long pharmaceuticals, I don't think would be a great idea. Not until we get some visibility. Okay. Oddly enough, I wouldn't be buying oil, but I'm looking at midstream, as well as the wildcatters, the development companies, because if he loosens restrictions and regulations for drilling, that's going to cause another boom in the regionals or the uh, midstreams. So those are their pipeline companies. They transport the product. So it's really based on volume that's being pumped. And Biden, in one of his, in many of his 126 executive orders or whatever it was on his first day in office, just I read an article about the opinion about he just gutted the energy industry. And so I think that oil, I think will come down. I think that's going to help avoid skyrocketing inflation due to consumer prices. But I think what's going to cause the skyrocketing inflation is inevitably going to be our debt situation. So unless they kick the can down the road again. So let's talk about EOSE, and then I'll open up the mics for comments and questions. Let's just keep it civil. A lot of people here that maybe I don't know or don't know me. I have a really simple rule. Um, just don't be a dick. So we can agree to disagree, and we can even do so strongly, but that's where it ends. EOSE. I don't understand. Well, I do understand. I do understand the reaction to the stock price today, because I think a lot of people were like me, who were expecting a DOE announcement earlier, as well as a new customer announcement. However, I still believe that the fact that Cerebras is involved right now for me, talk to me differently in 8 months, because that'll be a full year that they're involved. Some of the fear that I've seen out there about Cerebras, I think, is misguided. The fear that they are going to take control of the company, and I hate to tell you this, but they already share control of the company. Um, Joe even said that, in terms of what they're bringing to the table. I think they were the genesis for the insurance idea. Um, let's get this out of the way. Am I concerned about the delay? No. Here's why. So a couple years ago, before COVID, I was asked. I was the business manager for a major league ball player for over 15 years, and he'd fly me around the country, look at businesses to buy, and we found one. And I really appreciated what Joe said today, which was effectively, hey, in June, we didn't even think we were going to be in business. It was pretty hard to line up a single supplier with a prototype and then for mass production, let alone a backup supplier. And if I'm reading him correctly, which I think I have since last November, since I got involved in this saga, I don't think he's the type. I think he's the type of guy that says, hey, you stuck with me, I'm going to stick with you. So I think we got that going on. Um, I look at the delay, and I look at my December calls. I'm like, oh shit, right? But I believe that the DOE loan has been a logjam. They have got to get that thing closed because it frees everything else up. I made this comment in a Twitter post. When we were looking at investment banking deals, there, if there was going to be, from the time that we announced the deal to the time that we went public, okay, if there was going to be the potential for a large customer transaction that would affect revenue during that time, we would either ask it to be booked prior to the offering or wait till after the offering, because it would change everything, all of our models. So I can completely understand why, what I believe, there's been a logjam. I do believe they will announce a new customer by the end of the year. Why? Because I believe they're financially motivated to do so. I believe Cerebras makes money if they get the financing for the new customer. As I've said before, I don't know what other lines of capital credit markets they're trying to uh, get funding through. But for the one customer, the large one, it was Cerebus was lining up the financing. Cerebus wasn't going to do diddly until they knew and the DOE knew what was going on with that loan. Secondly, Cerebus willingly waived 2 of the milestones, and they didn't take stock, and they didn't take over the company completely, and they didn't fire Joe and all that. All I care right now is that Cerebus gave them money. They did better due diligence and deeper level due diligence than anybody else has done. Okay. Could they make a mistake? Sure. Are they in the business of making mistakes? Absolutely, positively not. And the allocation, the size of the position within the fund that's in was at well, it's greater than 10% now, based on Cerebus when they went into it, when they announced the deal. And so Cerebus is a good partner. Cerebus is not, thus far, what I would call vulture capital. Vulture capital would have come in, looked at the deal, and then said, we'll just wait because you're going to be out of business in about 90 days. So they're not. And they just had 2 more chances to hose shareholders. So just like I don't like taking horseshit and, making it out to be a diamond, I'm not going to take good news as bad news. You have a private equity firm that, for the time being, has interests that are aligned with shareholders. That's fantastic. Okay. Number 2, you've got um, uh, management that, looking at their order backlog, looking at the number of units that were waiting to be on the floor, they would have hit their revenue target. I am not concerned about the lowering of their guidance and pushing it out 6 months. If I'd have to believe that Cerebus said to them, when do you think, you guys will be not CM, which is, by the way, an interesting term if we have any accountants here. But when do you pushed out the large scale production until 6 months? I think they are sandbagging. Again, we need to think like Cerebus would think about this as an investment. Cerebus is not going to be selling their stock. They're not. I mean, why would they? I mean, literally, why would they sell their stock? They've been there for 4 months. And I do have to say this. It just amazes me the impatience that retail has. There is a time to be impatient. For example, if you're being lied to, you should be impatient about that. But then there are times where there are things in every company that will happen. But ultimately, I look at EOSE and I'm like, you guys aren't running out of money. There you go. DOE still wants to give you a loan. That's good. Cerebus could have hosed you and not given you the waivers on the milestones and taken more stock, but they didn't do that. So other than the delay, I'm looking at this like, and even though it's busted my shorter term calls. So here's the other thing. There we go. Cerebus signed to help on battery management software. JMS, that's a great point. And ladies, we can talk about the oil. Ladies on film. Look, here's the other thing with Cerebus. Remember that Cerebus, their chairman, was part of Trump's 2016 economic team of advisors. There's one important thing. Number 2, before, in the summer, one of the first things they came out after Cerebus got involved, they added in the 94% American made, but also it's, helpful for our allies. So I and this bolt on the battery management software, this is what I'm talking about when a private equity comes on board. That's a good private equity. They don't just add alpha by adding money. They add alpha because they have all these other relationships, right? It's the old game of, hey, I know a guy. I do this all the time. And somebody says, hey, I need this. I'm like, hey, let me think. Maybe I know a guy. That's what private equity is. That's part of why I wanted Enovix, their IR, to go outside so they'd be able to have the benefit of some of those relationships. But that's what I think Cerberus brings to the table. Okay. If Cerberus had a concern about, well, I don't know, if they just wanted the tech and they wanted the company on the cheap, they wouldn't have invested. And even now they could have single-handedly killed the DOE loan. That, it just it befuddles me why, and it's a microcosm EOS is in the inverse to what's going on in the market today. Look, I am not one of those people that says, wow, the market's up 564, it shouldn't be here. No, it is here. It is here. There's no argument. EOSE shouldn't be down 60. Well, it is. Do I think it's an overreaction? Yes. Am I going to get long? Not yet. Okay. Because I'm looking at EOSE chart, and the takeaways I have today are, one sec here. If I look at that candle, okay, the bulls barely won it by closing on the upper 50% of the range, right? Oddly enough, it stopped at a previous resistance level right here, and at the support level. This, in order for me to get long, I need to close above this candle right here. Give me a close above 278 and I'll get long. In order for me to get short, we're going to have to close below $2. And I believe it's $1.87 is pretty major support. Yeah, $1.86-ish. Yep. 82-ish. So okay. So I look at the chart today and I look at the price action. I look at the news, and my takeaway is I believe that the price action is an overreaction, but I think part of it, a great deal of it, is people got pretty excited about the possibility of there being a double announcement. I still believe the stock has a potential to a hockey stick. But I can't tell you if the down move is done yet. It appears as though it is, because today it held. So I need to see a close above today or a close below $2 before I either get long or short. I have not sold any of my calls. I mean, the original batch, yeah, I sold 75%, but I still own leaps out to 2026 also. Any additional even swing trades are going to be out at least until January, maybe even February. And so, and I'll probably move out on the January 2026s too. Let me show you here. I own the 26s. Oh, those $1.33. Those are ones I bought for like 69 cents. I own the January 25s, and then these Decembers. The only ones I'm concerned about right now are the Decembers. And also it's important, I think, to keep perspective too. If I look at the weekly, yeah, January 1st. So we opened January, this is 115 at 80 cents. We hit a high of 365, 420. So 50% retrace would be right around that 210-ish, 220-ish level. We hit a low today of 223. So technically, yeah, we're in a supportive area. I don't think there's any more bad news coming. So I do think it's an overreaction. I do not think it has not changed my January 2026s. I will go out. Let's see how much 27s are. Yeah, see, there's still more than I want to pay. 250s. If the stock breaks through, I'll look at the January 27s. Now remember, where I've made the most of my money is on leaps, by the way. I mean, I've made on shorter term, but the most of the money was made on those leaps that were really far out. And I've talked to our members about how leaps have almost an invisible hand on underneath them because of the massive amount of theta time value that's in them at the beginning of the contracts. That they don't move proportionally to the underlying. It's like a buffer, and that buffer actually adds alpha to the upside when the stock is going in direction of the contract. So anyway, so that's where I'm at with EOSC. Same thing with the overall market, and those of you who know, what am I expecting tomorrow? Oh, I don't know. We're going to test this gap. Okay. And let's keep it in perspective, everyone, because the Russell, yes, what, up 6-7% today? I'm sorry, I'm a little tired. I had 2 days of food poisoning. Let's go to the monthly. We're getting within shooting distance. This is the shot, but I would expect a retrace of these candles tomorrow on the daily on the Russell. I mean, a little bit of a retrace at the test. But as I put in a newsletter for the last month, 3 weeks, that I put both sides. There are ingredients in place structurally for the market to go higher. The only reason for the market to go lower are all the outside outlier risks that continue to grow. And my belief is at some point they will just sort of break through the ice. And so that's where I stand with both of them. Does anybody have any questions or comments? If you do, you can raise your hand. You can turn off your. Aaron, I think solar, wind, I think they're going to get just trashed. Um, I, again, the latest was that there is bipartisan support for battery storage, lithium battery storage. I was thrilled to see the municipality, large con, 97 million, I think it was. Thrilled to see that. But I don't, from what I've read, Aaron, I don't believe they're going to affect customer demand. Are you talking about will the municipalities have the federal grants to buy? Because, oh, you did comment. Thank you very much. I think nuclear is excellent, by the way. Yeah, tax credits, grant. Yes, yes. Um, I find it interesting again, and it doesn't guarantee, uh, you know, stock appreciation, but it's better than a punch in the mouth. When your chairman sat on the economic advisory board, I find that interesting. I think that's only a benefit. I find it interesting that they've talked about and alluded to maybe getting military applications. Um, and again, companies can talk about that kind of shit, but if they don't have access to the right people And my point is EOSE has the access. Okay. It's their co-owner, Cerberus. So they have the access. And so, do I think that's something I can trade off of? Absolutely, positively not. Absolutely not. But do I look at today's price action as a start to going back down below $1? Are you out of your mind? No, absolutely not. Why? Why would the stock go down to $1 when? What's the worst that can happen to stock? It goes out of business. Okay, they're not going to go out of business in the next year. Cerberus is going to do everything it can. The best thing that happened to every retail shareholder for EOSE, Cerberus got involved because they have a lot more money invested, a lot more at risk, a lot more intelligence, experience, everything than all of us. And they're going to protect the investment, period. So, and they've proven that they're in it not to exercise a default on their debt, but they're in it to make money on their equity, as true private equity firms usually are. So that's my opinion, Aaron. Nuclear, absolutely. I think nuclear, but I think the challenge on that stock, Doc, is unless you go for some of the big. Well, let me ask you this: is there a well-capitalized company that is publicly traded that sells mini nuclear reactors that neither Google, Apple, Microsoft, or Amazon is not, or Tesla has not bought up? Because that's what you would need to buy, right? I was waiting for an answer, so apologies. And oil. You think oil is going up based on what? What would the thesis be for under Trump oil going up? He's going to increase supply, right?
Are you talking to me?
Yes,
This is
sir. Yes,
ladies.
sir. Yes, sir.
Yes. I don't think it's going to go up. I just think it's going to stay in a range of
Mm.
between $70 and $90 a barrel. That's where I think it's going to stay for the long term. And the reason for that is realize right now we are producing record oil. We produce more oil in the last 4 years than we ever did prior. I mean, we are producing record oil right now.
Mm-hmm.
And the reason why it's never said by this administration is because they want the green energy policy, so they don't want to say, oh God, we're producing more oil than we ever have. So it was kind of a catch 22 on their part. But the reason why it won't go down too much is the cost of getting the oil out of the ground. When oil went negative during the pandemic, that crushed a lot of the people that drilled for oil, and they will not let that happen again. Where it will go down to below where their capital expenditure is to get it out of the ground. I'm in gold mining more than in oil, to be honest, and it's the same kind of thing there. If gold goes down to $1,500 and it costs you $1,600 to take it out of the ground, you're not going to take it out of the ground. So but if it's at 2,600, you will. Same with oil in the situation that we have there. And I just don't think, even if the Trump says drill baby drill, they're just going to say no baby no, simply because if it goes down to a number below what they're extracting it at, they're just not going to do it. That's just my thoughts on it.
Well, I was part of, we brought, let's see, 4 different oil and gas companies public. And I know one of them was in the Permian Basin. So, Waco, um, where the big shale boom was, oil. And their their break-even cost was, and they were maybe a $500 million company. Their break-even cost was somewhere around 45, 46. I've heard the Saudis need to be at 63 in order to keep their policies. But here's my thing, and I appreciate what you said, but here's my point. I don't think that with geopolitical risk, I think should be ratcheted down. I believe, not ratcheted up. Uh, I think that the I think that geopolitical risk premium that's in oil, even though it's not enough, I think that'll be dragged out. I think economic slowdown globally will put a drag on demand. So I think there's that. And then, as you said, we're already pumping record levels. And then you kick in more production. And I'm hearing what you say. Well, the oil producers won't do it. But I remember when oil was $11 a barrel. So they, I mean, they won't have a choice because it didn't happen last time. So that would be my opinion. Let me get on to a couple of these other questions, though, if you don't mind.
No, not at all.
Underestimating the impact of the U.S.
Thank you
dollar,
for
man. Look
taking
at
it.
2014 when the oil went from $100 to $30. I think look, a rising dollar makes it expensive for everyone else in the world. So you got to take that into account, in terms of demand. That's not a demand catalyst. You think the dollar is going down? Okay. Depends on the time frame. Ultimately, yes, yes. Uh, Over the next at least until January, I'd look out. Depending on what type of policies he releases, I don't think at least until January. But again, there's so many things going on that could break, right? So, ladies, when you have a thesis, try to drill it down to your time frame. Remember what we always say, what's your stop, what's your target, and what's your time frame. You got to estimate those three things. So when you have a thesis, okay, what's your time frame? Because I think the dollar is going down. Well, I do agree with that. I also think it's going up, but it's going to go up first. And I think that's going to be because the world expects correctly that Trump's a protectionist. And we're going to see if he follows through and he's actually going to be as protectionist as he swore he's going to be with these tariffs and stuff. But it is November 6th. Okay. We've got 2.5 months, right? 80 days, 97 days. Was that what it came out to? Or 87 days, 86 days left till inauguration. If you believe that it's going to be all smooth sailing, then I guess we disagree. I don't believe it will be. I believe that on my VIX calls, I'll make a decision probably Monday because I want to see what the market does. I want to see how the Dems, after they've had a couple days of stew about it, I don't think there's going to be recounts. I don't know. I don't know if it's going to be a certification thing. I just don't know. So, what's the first potential shoe to drop then? The first potential shoe to drop is always the one that nobody expects, right? It's always from out of left field. Long-term capital, nobody expected it. So where would it be? Well, I still think it's going to be out of one of two areas. It's going to come out of Japan or it's going to come out of U.S. commercial real estate. And I think it's going to be, okay, so these rising interest rates have a net effect on these trading desks too. It's, they're oddly enough, you still think they try to kill Trump? I don't know. I don't know, because that's why I'm sitting here today watching the news going, wait, everyone's just, they sort of sang kumbaya, and everyone gets together now and gets along. That's why I look at this market today. I'm like, okay, what are you all celebrating? Can anybody tell me what the market is celebrating today? What is the market celebrating? Volatility, yeah. That was to be expected after the binary event of the election. A clear win without ambiguity. Okay, Josh, I lost my voice. Here's a celebration. A clear win without ambiguity. Fair enough. Do you think that's going to last, Josh? Through inauguration? No. The question is, how big will it be? I don't know. But I knew I had a high, I still have a high degree of probability that, oddly enough, that I'll still get paid on the VIXes. Oddly enough. And due to position sizing, and due to the fact I think on a couple of them, I said to them, they're all or nothing trades. Terrorism. Yeah, I don't know, Mr. White. For all the, I did spend some time, and I thought about, have I been too negative? Have I drank Kool-Aid? If the Fed lowers interest rates, won't that's what's supposed to happen. But the last time the Fed cut 50, now rates are up 100. Not being close at all keeps most of that stuff off the table. I agree with Josh. That's exactly what I think, Josh. This is just like whew, we got through that one. I believe that too, Shane. I think there's some of that going on. And I think people remember in his office in the first 4 years, the economy really was doing very well up to COVID. So I think their, market-based case was a drawn-out legal fight through December. Marcus Jennings, a rally obtained. Here's what my concern is, Josh. And Dan, I saw your comment. Thank you very much. Josh, market-based case was a drawn-out legal fight through December. So here's what I was thinking. What could I, am I wrong? Am I wrong? I'm always about, am I wrong? Because I'm confident that I'm going to be right more often than I'm wrong. Because statistically it happened. So what am I wrong with? Timing. Could they decide to just say, we're going to let him in the office, and we're just going to, again, yeah, but how do you trade it? All I care for right now is the market pick a freaking direction. Because let's not forget that this market has literally been trading within less than 1% since back in July 15th. Yeah. August, September, October, November. I think the market's just like, thank God, let's just break out of the range. So Josh, I do agree with that. The market is generating a rally to obtain retail liquidity to sell into. I think the market's always selling into retail liquidity, Dan, but I do hear what you're saying. I think there's going to be some structural headwinds going into the end of the year. I think you have the Santa Claus rally. I think you've got um, the blackout period for corporate buybacks is now closing. So they're going to be able, which they have been the largest buyers in the market, by the way. Oh, I know what I wanted to ask everyone. Generally speaking, most people would say, other than me, well, I think he is. I just think he's a dirtball. That Warren Buffett is what you want to be if you are going to be an investor, right? So my question is, how do you think Warren Buffett feels today? He sold all his Apple. He sold all his Bank of America. In fact, he sold all of his banks, not just Bank of America. Bank of America is the only one that he owned too much of. So one of the greatest investors ever. No, you're right, Shane. I don't think he cares. So here's my point. If you want to have different results, it starts with how you think about not only your expectations, but opportunities, looking into the market, right? If you're sitting there saying to yourself, geez, I wish I was in the market, I'm underinvested, that's okay. But it needs to stop there. You just don't feed into it. Yeah, when I woke up today, I see EOS, I'm like, oh, well, I wish I hadn't bought those shorter calls. I'm like, oh well, I did it. It's one part of my portfolio. Whoop-de-doo. Josh, I don't know because I have a theory that he's preparing to be the lender of last resort to the Treasury too. Ladies on film, I saw that they're starting to do fire chats again. I guess it's the season, Christmas. Yeah, that's a big deal, Dan. The no LOIs. Yeah, that's a huge deal. Very much. Thank you. Josh, if Warren Buffett becomes the new Fed, then I'm leaving America. I'm just kidding. Uh, the whole issue with EOSE, I literally am sitting here and saying, excuse my French, what the fuck is wrong with retail investors? Literally, I'm like, what is wrong? They get a partner with deep pockets, with management experience, with full cycle management experience, who's had multiple opportunities to hose the shareholders and they've not done it. What's the problem here? Yes, Shane. Well, let me ask you, what do you mean? Am I talking about will I take the loss? And yeah, I, if the market has a big drawdown intraday and shows recovery based on the charts, I still have to wait for the close though, and then I get the next day for the open. Again, my whole thing is catching short-term momentum. Okay, so it is, believe it or not, it is difficult for me to think longer term than like 3 months when I look at a trade. I just, my brain goes to too many variables. I can't predict. EOSE retail is special breed of traumatized because they got played by a pump and dump. Yeah, yeah. Well, I wasn't around for that one. People perish for lack of vision. Yes, Proverbs. Good book. Um, no, and I'm looking to get long. Well, I don't know what I'm going to do. I honestly don't know. I do know they put a nice bear gap in today on all the indices, so that'll be fun to blast through on the way down. Bear gaps just provide acceleration on the way down, so that's nice. But could this market continue? I don't know. Was it 2.5 months ago? I said 6,000, 6,000 on the SPX, 6,000. Why? That's an even number. There's, S looks like we may hit it. Um, I'll know by the end of this week. And if we do go long, it'll be by a 2x ETF. The numbers I read today by midday were that the Magnificent Seven were garnering about 41% of the money going into the market today. And that those companies that were more sensitive to the economy, they were not going up today. I looked at a FinViz heat map on it. So this is, again, a concentrated rally. It's nice to see the Russell. If that breaks out, then yeah, we're in a blow off top situation. We need all three. And until that happens, I'm going to get in on 2 out of 3. I'm not going to wait for the Russell this time. I'm going to get in on when the SPY breaks. And that could happen by the end of this week, which is set up nicely for next week. That means we have all weekend, a season. meaning let the Democrats decide they're going to do something. We go into next week. Maybe the buy momentum will last, and we will be long. So I'm okay with that. Any questions, comments?
My question probably was more around like intraday trading. I'm
Yeah.
betting. I was just thinking, like, hypothetically, let's say a little bit after the open, the market falls 20%. And like, do you look at any point in time to like, well, and we'll say that it recovered, 15% of that or something throughout the day. With that drastic of a drop, do you ever, I guess, look at it and think, oh, look at it and make moves for an entry point to get out maybe that day or the next day? Or, um, I guess, how do you play it? I
I want
haven't
to know
seen
what the
right now like that.
catalyst was, whatever the macro fundamental catalyst was. And after I know what that is, then I can do just a back of the napkin measurement if the stock price move is an overreaction. This is an overreaction today, but I understand that there's heavy long positions on November calls because of expected DOE and expected customer announcement, I think, hoped for. So, but like today, what I was immediately looking at on EOSE was where was support at. I started with, weekly, monthly, weekly, daily, and then I figured out, okay, this is where I'm going to pay attention. Tops and the bottoms of today's range. That's going to be my first indication of who is trying to take control, the bears or the bulls. Okay. Today, the bulls eked out a minor victory. They didn't have a chance because it gapped down, but they eked out a minor victory by closing in the upper 50% percentile of retrace the entire market tomorrow. EJET, if that happens, I will kiss you on the lips with Jake's mouth if that happens. I forget what I was saying about a USC, but yes, I don't understand the short sightedness. When people tell I'm a long term investor, and I see all this pissing and moaning because the stock's down 20%. I'm like, I thought you're a long term investor. I thought when the stock goes on sale, you bought more. Now, I don't recommend that. But, and sort of being sarcastic here, like, come on. I mean, literally, this company was going to be out of business. So they got a lifeline. Let's see what they can do. It's only been 4 months. My gosh, give them a shot. And it appears to be that Cerebus is adding value to the actual operations of the company itself. I don't know. That's a fantastic partner. Fantastic partner to have. So, all right.
Okay,
Shana, did I answer your question?
you hear me?
The answer, Shana,
Yeah.
is no. No, I
Hello?
will not. If the market was down 20% intraday and my option went down 50%, no, I would wait for the close.
Oh no, I wasn't talking
Oh,
more. I didn't say around like an existing position. I meant just an entry on a new position.
no. No. Even like on a fast mover. No, I want to get in the morning. I want to get in the morning.
And that's mainly just because you have a better view, more stability, right?
Well, if since my methodology is about catching momentum, I have more time to catch and then stay in the momentum, right? If I buy it in the morning, I have the rest of the day. Towards the end of the day, I have no idea if that momentum is going to carry over or not. DJet, I saw no institutional buying on the close at EOSE. I didn't see any. If I check the 1 minute, maybe. Nope. Nope. Institutions, they were doing a little bit of buying earlier in the day. Every single time they went in and bought, the thing went up, though. Otherwise, it sort of just stayed at that range. But no institutional buying. And yes, no, Shane, I don't execute trades in the middle of the day.
That makes sense. How about like in
And
the?
trust
I
me,
just try.
having a guy like Count Stockley in the room, he's calling out trades in the middle of the day, you know? So I'm like, oh, I want to get into that one. I want to get into that one. Yes, I'd like to get into that one. But If I do, there'll be lotto plays. And for those of you who've been around a while, I did say this at the beginning of summer. The risk was high. People forget. Look back what we just went through. Risk was high. That my first rule of trading is protect capital. I would much rather people hate me, and this is my attitude I have with clients. I'd much rather you be mad at me for not making you money instead of losing your money. And just like your emotions and controlling them is the key to be a successful trader, on additionally protecting your capital. Because if you don't have any, you don't have the time to work out all your weaknesses and bad habits, and you just don't have the time. So it is trading is about like, can you stay in it? Can you stick with it? Can you put up with the pain? Can you put up with the loneliness? You know, can you do it? So hopefully this community provides you the ability. Yeah, you can talk about it. But this, yeah, no. I remember this happened after September 11th, after the markets opened too. There was just this huge outpouring, and then the market continued to go down. This is okay. And by the way, be prepared for this shit, because when the market does turn, unless somebody here thinks that the market is not destined to turn at some point, but when the market does turn, you're going to have, this is what would be termed a bear market rally. And this is where a lot of the bears that are out there, they're, I hate this market, and they will not make money, because they will get shaken out. Maybe on the first trade, maybe the second one, and how do I know that? Because it's happened to me. I've done it. So, um, remember, everything I do is for a reason. And also, I am constantly reevaluating my own thesis, my own methodology. What did I miss? Am I too biased? I feel a great deal of responsibility, not only to my VIPs and traders, but to everyone I come in contact with. Because what I'm trying to do is change people, have you change your lives. So, yeah, I bear a great deal of responsibility, but I've been here before. Remember, I told you that I got sort of yelled at for a couple months before the final crash happened, because I had shut the quant fund down and given money back. So you guys are very nice about it. It is. I've been here before. So, hey, thanks, Josh. Yeah, we can finish up. Anybody else have any questions, comments, disagreements? I'm fine with all that.
Boss,
Go for it.
can you hear me?
Yes, sir.
Thanks for doing
Yes,
this as
sir.
usual. Appreciate it. I
Still
follow
hungover?
the available short shares on. Oh my God. Oh yeah, we had some fun last night.
Okay.
But recovered. Then home and back to the grind. I follow the available short shares on a few stocks, and I've obviously been watching the EOSE. And I think there's 50,000 shares available to short right now. And I saw that last night or yesterday at the close. It was like it started out around 1.5 million shares, and then by the close there was none left. I think that someone might have had some knowledge. Who knows? It's all speculation. But do you still think, with that being said, that do you take that into any consideration on the downside? Because there's so many.
That's somebody new, or there's
no short.
so many shorts, you mean?
Yeah, and they're still short today. I mean, no one
Yeah.
didn't appear to.
Well, I'd expect the short position to grow. Yeah, I would expect it to grow, based on today's news and price action. I would expect it to grow. Do I take into account the growing short position? No. I mean, I do. And I weigh it. Yeah. And I believe they're wrong. I don't believe that they're lying about their backlog. I don't believe they have one customer concentration. I don't believe that their technology is bullshit. I don't believe that the shorts know more than Cerberus does. I don't believe anybody knows more than Cerberus does right now. So I've already been sitting here thinking about, do I use a relationship so I can talk to somebody at Cerberus if they would talk to me? Because I get a much better feel for a situation if I talk to somebody that's involved. But no, I don't DJat because, you know, okay, I've had the ability to trade and take so much money out of EOSE that it buffers today for me those short calls that I added back. Because I'm like, okay, so I lose a little money. Big deal. Now, that's different for most people because most people didn't follow those trades, didn't do them, and aren't sitting here with realized gains, that can buffer emotionally as well as financially, you know, those short calls. That's why what I do is a whole system. It's not just, there's YouTube guys out there, there's guys that sell courses, and it's on one topic or one method or one signal. Mine is risk management, portfolio management. And so when I look at a stock like EOSE, you have to understand I'm looking at it in the context of it, that even if I wanted to go heavy on it, it was maybe going to be 15%, 20% of my portfolio. I'm like, okay, so what? I mean, I'm not going to lose 100% of that investment. I may lose 50%, but if I lose 50, okay. Why? Because the upside is so great. And I thought that I would share this real quickly. Somebody was asking me about options as Shaner and I were talking about compared to Tesla. And the reason why the way we use options works is because of this. It's very, very simple. Okay. We limit our losses on average to about 25 to 30%. But because of the leverage involved, our notional exposure is 100 times what our capital commitment is. Okay. So think about it. We usually, when you have the chance to make greater gains, you also experience greater losses. There's a higher degree of volatility on both sides. But with my methodology, we sit there and we fix those losses, right? So if my average size is 4%, and let's say I take a 40% average loss, that's not average, by the way, 25% is, but let's say I just wrote it down to 40%. That means that I could survive how many bad trades? I could survive about 60 bad trades, meaning in a row. No, 35 bad trades in a row before my portfolio would be blown up. 35, right? Oh, I'm sorry. 35 trades in a row before I lost 50% of my portfolio. So my point is that protection of capital, okay, if you can do that, you will always have capital to trade the next trade, as opposed to I'm going to go in heavy on a company and then get caught up in it and do all that. Yes, you may get lucky and you may make a lot of money doing it, but again, the odds are you won't. So when I look at EOSE, when I look at an NVX, okay, I am not a macro fundamental investor expert. That's not me. I'm a technical trader and I'm trading off the price. I take macro into account when we have large events like we did today. However, at the end of the day, what did you hear me say? I'm still waiting on price. Look, NVX, either you get back above $10 or you're done. You're not going, I mean, you're going to sit here and drift lower again. And that's going to be hard. Point of control and even number right above it. And we got a gap. So EOSE, pretty simple. Either you put in support here, if not there, it's going to be down here. 208, $2 has got to hold, right? $2. We hold that, move sideways, get a little time, or this thing could open up and reverse tomorrow. I don't think it will, but it could. It's done it before. I mean, we've had days where, you've had a big down day and next day you've recovered. So let's wait and see what happens. Same thing with the overall markets. We need a couple days of price action. There's nobody right now putting a crap ton of money into the market. They're not going heavy. Okay. The market was up, 350 in the overnight. So what did we get out of it? 200 during the cash. So the market was up 200 points today. I don't count the overnight because that's up by futures. So, all right. That's about it. Any other questions or comments? No? Well, thank you all for coming. And next week I'll start the live podcast, market close podcast. As soon as I get all this crap all figured out on my technical side.
They ain't got no muscle, no hustle, no backbone. I stand alone, not tripping. Just saying, I'm different. Ain't hanging on to the